In this episode, I'm going to talk about expat financial planning issues. This is the all-in-one AIO financial podcast with Bill Holliday. We discuss financial planning issues, investing, taxes, estate planning, insurance, and retirement planning. It's brought to you by AIO Financial, a fee-only fiduciary financial planning firm working with clients all over the U.S. at AIOfinancial.com. Thank you for joining me on this episode. As you can tell, we're making some changes in how we're structuring this. The Impact Financial Planners podcast will be hosted at impactfinancialplanners.com, and that'll be a separate channel. This channel, we're going to focus on a lot of different financial planning issues, not just sustainable, responsible impact investing. I'm moving that out to a different podcast, different blog. So let me get started with this talk about expat issues for people that are living outside of the U.S. The State Department estimates that there are 9 million U.S. citizens living abroad. The top 6 countries where Americans live abroad are Mexico, Canada, Germany, Philippines, Israel, and the UK. There's a lot of reasons why people live abroad. Could be job, relationships, work, retirement, study, adventure, divorce. And there's several financial issues that can make your experience abroad more successful. And so I'm going to go over some of those issues. I have 7 that I'd like to touch on. Number 1, I'm going to talk about taxes, underestimating your cost of living while abroad, banking and money transfers, investment products, investing in small businesses. Number 4, health insurance and insurance in general, but health primarily, investment accounts with your assets that are being invested, and then estate planning. And these are some pitfalls and opportunities, but taxes, there's a lot of different issues for expats with taxes. I'm going to just touch on a few. You have to file taxes. If you're a citizen, you got to file them, and you file on your global income. There's this foreign earned income exclusion that in 2019 allows you to exclude $105,900. So that you don't get double taxed on it. So if you make under $105,000 overseas, you'll pay your overseas taxes and then you're done. You just get a credit on the U.S. side. You won't have to pay on that money. But you do have to declare all that. If you have an account with more than $10,000 in a foreign bank, you have to file this Form 114, this FBAR, Foreign Bank Account Report. There's no penalty, there's no tax on doing it. It's just you have to do it, and if you don't do it, you can get penalized. And it's pretty severe penalties. If you have more than $200,000 US dollars in foreign accounts, you just have to declare it too. No big deal, just declare it. Form 8938, and just stay out of trouble there. Your tax situation will drive tax-advantaged accounts like your IRAs, Roth IRAs, 401ks, education accounts, 529s. Depending on what you're taxed in the U.S. or what earned income you have in the U.S. will determine if you can do tax-advantaged savings on in the U.S. For your U.S. accounts. Taxes are important if you own a business registered in another country. You'll have to file in that host country. And again, global income needs to be declared in the U.S. Consider your Social Security situation. If you're not getting taxed on money in the U.S., that's fine. It may work out great, but just be aware that if you spend 10 years abroad, earning under that exclusion and nothing's taxed in the U.S., you're not contributing towards your Social Security. So be aware. You know, Medicare, you want to make sure you get your 40 quarters. And then Social Security, just know it's going to be not as significant. Not a big deal, but just be aware. There's a bunch of countries I list in our blog that have a bilateral tax treaty. Mexico, Canada are amongst them. That's all I want to touch about with taxes. I did a whole blog about this, podcast about this, and I'll put a link to that on the website. Underestimating cost of living. So you show up in a new country, you assume it's cheaper, you assume it's more expensive. You can get a lot of information online. Blogs, Facebook groups for local expats. There are websites that give you an estimate, just a percentage for different spending categories. You can get a pretty good estimate before you go. But still, there's going to be unexpected expenses, even with all the research. Car insurance, maybe more, maybe less, but it could be different. Health insurance, visas and registration paperwork for either having a business or working. They could, if they fall upon you, those could be expenses you're not used to. Taxes, shipping costs. If you're going to ship things, you're hoping to take your car with you, or some of those costs maybe more than expected. Utilities, maybe more, maybe less, but they could be different. Some countries, you're buying water, drinking water by the 5-gallon jug. Pets could be an issue if you're bringing pets. Just a cost to consider. But, research will help, but just be prepared for extra expenses, unknown things that are going to happen, getting sick. There could be just things you want to be aware of. If you treat your expat experience like a vacation, just be aware of that spending. Of course, there's going to be cool new things to see, new experience to have. Just be aware or budget for that. Be careful with that. Don't just go crazy if you don't have the budget for that. If you're thinking, I'm going to live like a local, here's the calculator. I'm going to save 50% of my spending. Great. Well, then live like a local. You keep that in mind. There's also lifestyle creep to be aware of. We all have it. Usually that means, you're spending more as your income's going up. Previous luxuries become just your standard expenses. You could do that a lot, or have seen that a lot with expat communities, where you're kind of missing certain things. And you might start off living like a local or living at a certain budget, and that can move up on you. Not unexpectedly, but it can move up. Just keep tabs on how that spending's going. All right, that was number 2. Taxes, then we have underestimating cost of living. Third one I want to hit on, banking and money transfers. You're going to probably want to set up a bank account in your host country. There's probably not too many situations where you wouldn't want to do that. And anytime you're moving money from the U.S. to another country, there's going to be a cost. Just be real aware of that. Look at options. We've found some banks that have just a low fixed fee for transfers. Exchange rates are reasonable. You generally want to do large chunks all at once. Hit their maximum. Each time you do a transfer, maybe monthly transfers. Don't do little transfers that the fees will add up to be a significant percentage. But also be aware of that exchange rate. So it might be a real low or even free fee or transaction cost, but the exchange rate is terrible, and that's how they're making their money. They're not doing it for free. There's going to be some reason. But even then, there are banks. If you find a bank in the U.S., they may only transfer at a discount to certain banks in your host country. So, research that so when you're setting up an account, it accepts or you have a good connection with the U.S. bank. Credit cards, debit cards, if you're using U.S. credit cards, debit cards, look at those fees, transactions. We have found some places who will have free, or they'll reimburse bank expenses on debit cards. If you're living there, you're probably not using a U.S. debit card, but you may need to. And there are banks or institutions, brokerage accounts, where you can get your bank expenses at $5, $10 reimbursed directly if you're using it. And that's nice. Again, exchange rates, you want to be aware of any other fees with credit cards especially. Consolidate your cards. You don't need 30 U.S. cards if you're living abroad for an extended period of time. You'll want to retain a U.S. address while you're gone. And you can change your mailing address to a relative, close friend, someone who can keep that up. That'll allow you to keep bank accounts open, won't impact your credit rating, and it makes it easier to incorporate if you return. And you may not, but if you do, it makes that a little easier, that transition. Okay, that's banking. Investment products, small businesses. So in many areas with large expat populations, there'll be financial product salespeople. And they're probably nice people, but they're getting a commission. They want to sell. Products may not be appropriate for you. They're not appropriate for everyone. Some of them might be good, some of them are not good, and some of them just might not be appropriate. Just be aware how people are getting compensated. Be careful with that. There's also a temptation, and I've done this, to invest in local businesses, start up local businesses. Just be careful. I mean, you want to help the people. They tell you there's great ideas. Do your research. Be involved. Don't turn everything over to other people. You got to be involved and keep track of what's going on. And do small amounts. You can always add more if things go well, but don't invest more than you can walk away from. There's lots of risks. There's regulation risk, there's currency risk, there's government. There's a lot of issues with small businesses. Just be careful. I guess that would be my word of advice. It depends on the country. I mean, there's a lot of starting in a little rental in a developed country may not be a big deal, but there are in emerging countries especially is what I'm particularly concerned with. Health insurance. A majority of your U.S. insurances will not cover you abroad. Travel insurance won't cover you if you're going to be a permanent resident somewhere. Be informed. Inform your insurance companies that you're going to be abroad for a while or forever. Make sure you have a policy that's going to work. And you may be getting a policy in your host country. So, that may make a lot more sense than continuing a U.S. policy. Depending on your situation, depending on your country you're going to. You may want some evacuation policy. Maybe that's not an issue. But look into that. Think about it. Get the costs. Even if you think it might be really cheap in the country you're going to, look into it. Maybe get a policy or investigate what's available before you have an incident and figure it out the hard way. You definitely want to investigate that, whatever country you're going to. Even if the locals don't use any policies, they just use the system that's available, you want to make sure you're covered for your comfort level. And that ties in with the spending plan. You want to have that in considered. If you're 65 or older on Medicare, you're probably going to continue your Medicare in the U.S., even if you think you won't return to the U.S., it may make financial sense to continue that. If you stop paying into Medicare, not having your prescription, your Part D, if you're not paying into that, then incrementally grows. And so when you get back and start paying into the system, you're paying a lot more. It's a pretty steep penalty for not continuing the policies. So you're probably continuing that. Of course, there's different ways to do it to make it cheaper, but you probably want to continue in some way. Number 6, investment accounts. So generally you want to keep your investment accounts in the United States. The brokerage accounts have low fees, generally lower than you're going to find in other countries. There's more investment options, better liquidity, favorable tax rates. Depending on where your host country is, reporting and safety may also be concerns. Depending on your tax situation, you're going to want to have, same as if you're not an expat, if you're just in the U.S., you're going to want to consider if you want a taxable brokerage account, if you want a retirement account, college savings accounts, they all have different benefits, drawbacks, and advantages. Exposure to host country currency, if your job is there, if you have bank accounts there, you just want to make sure your investment accounts are weighted to consider that, so you're not getting overexposed, you're getting global exposure and not overweighting some country to avoid risk. Be very aware of fees. As with non-expats, if you're just opening accounts, just be aware in the U.S., be aware of loads, fees, commissions. If you're working with a commission or fee-based advisor or broker, typically you're paying a sales charge or commission every time you buy or sell mutual funds, or they're selling them with big 12B1, fees that they're getting for selling you funds. Just check. We recommend using fee-only fiduciary financial planners. You can work with them on an hourly basis or an assets under management basis. They're unbiased. They're working for you. They're not compensated by commissions, loads, selling you products, getting you into annuities or things that might not be appropriate. NAPFA is a good directory of fee-only advisors. I do have an ebook about investing. You can look into that. I also put on the blog post a list of places, countries, where you can open accounts in the U.S. and live and have residency in another place. So if you're in Mexico, it's no problem. You can open U.S. accounts, no big deal. In Canada, it's actually a little trickier. You can do it, but you have to do it through a trust, so it may not make sense. Canada, you may want to be investing in a Canadian brokerage account. There's a bunch of issues there. I guess there's a bunch of countries where you can. A lot of Latin America. The list is there. Okay. 7th issue, estate planning. So this is something that is easy to overlook. It's easy to overlook if you're not an expat, but expats too. If you have your estate plan documents, which means a will, what happens if you die, healthcare power of attorney, financial power of attorney, which are while you're alive, you just want someone to handle your finances or healthcare decisions. Living will, what are your end-of-life desires? How long do you want to stay plugged into stuff? Making sure you have correct beneficiaries on accounts and on your property. So there's cross-border estate planning. It can be complicated depending on your situation. If you have families in 2 different countries and different beneficiaries, it can get a little tricky dividing assets. But if you stay on top of it, it's not that bad. So you're probably going to need estate planning documents in your host country. Again, depending on your situation. How long are you going to be there? Are you moving around? But you're probably going to need documents in your host country. Where are your assets? You could have, if all your assets are in the U.S. with beneficiaries, then your will and your beneficiary, the designation for your assets may be covered. But you may be in a situation where you need guardians for minors. If you have end of life or powers of attorney, you'd get that taken care of in your host country. Probate, inheritance could be treated differently in your host country. You really do want to speak with a professional to ensure that if something were to happen, if you were to die, if your spouse were to die, that your wishes are met and your family members or charities or whoever the beneficiaries are not unnecessarily burdened with taxes or hassles, delays. All right, those are my 7 top issues to address. I had a couple other comments I wanted to add. When you're reporting the capital gains from buys and sells, you have to do that in the currency. I mean, it depends on the trade relation, but if you have an account in the U.S., you're keeping track of your purchases, and then you sell, there's a capital gains, but you have to go back and for the foreign taxes, for the taxes in your host country, you have to go back and look at what was the purchase value in that currency, and then what was the sales value in that currency to calculate what's the capital gains in that foreign currency to report. One example I came across was Germany has high taxes. So you're probably, you can't make, or it's not going to be beneficial to make an IRA contribution. They have high taxes, so you're going to pay those German taxes, and you're going to get deductions or exempt from the U.S. taxes, depending on the earnings. This is not in every case, but as an example. In Hong Kong, the taxes are lower. So you're going to pay those foreign taxes in Hong Kong, but then you're going to have be a net U.S. taxpayer because you get the deduction off the U.S. taxes, but it's a higher tax rate in the U.S., so you're still paying a U.S. tax. So making an IRA contribution does make sense if you're living in a low-tax country and you're paying U.S. taxes. I mean, depending on your situation. Yeah, the currency, and then there can be a mix, the local and U.S. tax. Estate planning, you just have to look, especially with international families, if you're gearing it towards the U.S. or the non-U.S. taxes. They're not always going to be the same what the tax situation is for inheritance. 529s, again, if you get a tax advantage of it because your host country has a lower tax, it does also depend on what your long-term goals are. Where are you going to be for your kids' education, or whoever the beneficiary is, who their education is. All right, those were just a couple other comments I wanted to add. Thank you very much for listening to the AIO Financial Podcast. This is brought to you by AIO Financial. If you need help with any parts of your finances, please contact AIO Financial for a free meeting, aiofinancial.com. As always, I appreciate your feedback. Please leave a comment. You can go to aiofinancial.com and find email, phone, Facebook, Twitter. Contact me any which way. It would be great. If you have comments, topics you want us to talk about, again, we're shifting this podcast to be more general, hitting investment, taxes, estate planning, insurance, any broad personal financial issue. And then the Impact Financial Planners podcast will be hosted at the impactfinancialplanners.com website. So if you want to continue with just SRI, impact investing, broadcasts, please subscribe to that separate podcast. All right, we just wanted to break that up a little. Hope that's not confusing. I hope I don't lose a lot of interested people. We're just trying to if you're interested in impact investing, we don't want to hit all these tax issues or other issues. And if you're interested in more broad personal finances, I don't want to just have SRI topics. So we're trying to please both audiences. You can subscribe to both and get all the information. All right. Thanks a lot. Please leave a review and rating at iTunes, subscribe at YouTube, or wherever you get these. It helps other people find them. I appreciate it. Thanks a lot.